Hey, what's up, everybody? Welcome back. This is the Mic Drop Show, and I'm Mike Morawski. I have spent decades in the real estate trenches, buying, operating, syndicating deals. I've raised millions of dollars, controlled thousands of units, and learned what works through wins and mistakes most investors never face. Hey, welcome to the show this morning. If this is your first time, boy, would you like us, love us, subscribe? We're here every Wednesday morning bringing you straight up content. Hey, you want straight answers, not just recycled theory, then you're in the right place. You want someone who's been through cycles, built portfolios, and then came back stronger than ever. Hey, I bring lessons you won't find in books or online or even on threads on Reddit. So I'm here for you. If you have questions this morning, throw them in the chat. We'll get those answered. But every week I'm here answering a boatload of questions that listeners bring in throughout the week. Hey, my recent session, I just had a master class on buying real estate with little or no money down. It was a master class that I really wanted to help people kick the year off for 2026, have some new tools in their toolbox and ways to buy real estate that don't get talked about a lot. You know, in the past, I've taught all kinds of methods about multifamily investing and syndicating and raising capital, how to do all of this with confidence and the ability to grow. And as we continue to build that out and teach people that, we thought we would bring a little twist to it. And part of that is buying real estate with little and no money down. You know, some of my experience goes back to the very first real estate deal I ever bought. It was a 4-unit apartment building outside of Chicago, $1,000 out of my pocket to buy that building. And I had $450 a month in cash flow. Are those deals still out there today? Absolutely they are. You know, I bought everything from single family properties to 4-unit, 40-unit, 60-unit, and up all the way up to 400-unit apartment complexes with little and no money down. And, you know, one of the biggest questions that I get from people is, why would a seller do that? Why would a seller give control of a piece of real estate to someone else and maybe even not get any money immediately from that transaction? Well, because they are what we call a don't wanter. And, you know, when you can find those sellers that are don't wanters, you can structure great real estate transactions that are win-win situations. Hey, I got a bunch of questions that kind of came up yesterday in the master class and have come up over the last week, but I'm going to try and dig in and tackle some of these. So one of the questions is, how do you structure a deal when you don't want to bring your own capital to the table? Well, you know what? I'm a syndicator. I raise private equity. We bring other investors into deals. You know, syndication is just another word for saying, hey, we bring a group of people together to share in the profits. Some bring their financial resources, some bring their expertise, but the combination of all those people together help close a real estate transaction, whether it's, you know, a single family property or it's a multi-unit property. So, you know, there's different ways of doing that. There's different structures. And, you know, I use a tool called a master lease. It's one thing that I teach that really encompasses land contracts, owner financing, rent to own, subject to, wrap mortgages, everything that you can think that's in creative terms is wrapped into this one document. And this document gives you complete control of that piece of real estate. And it gives you the ability to maybe not even bring capital or very little capital to the table to get a deal closed. Now, do you need money? Yeah, in some cases you might need a little bit of money, but not, you know, not what you would need if you were traditionally financing a property. So I want to help you to get this tool for your toolbox. You know, I did this master class yesterday, but I have a 6-week program coming up starting in January where I'm going to go through over 6 weeks, everything from how to find the best deals out there, how to talk to sellers, approach sellers, what scripts and dialogues to use, how to structure creative deals, how to buy a deal with little or no money down, what type of paperwork, contracts, offers do you use on those, acquisitions, how to run them, manage them, and then, what that structure and strategy looks like. And so I'm going to go over that over a 6-week period. And if you're somebody who says, hey, you know what, I want to start 2026 off a little bit different than 2025 was. I want to get into real estate. I don't have money. I don't have credit. I don't have experience, or I do have all of that, but I want another tool in my toolbox. This 6-week masterclass is going to be for you. So I'm going to invite you to join. Why don't you send me a DM and we'll get you the registration information on that. And, we have a bunch of people that have registered for it already. So, if it is something that you think that you want to take advantage of, let us know here quickly. What signals, I like this question, what signals tell you a seller is open to creative terms instead of traditional sales? I don't know that there's any one signal. I don't know that there's any one thing that the seller says or does that indicates that. But what you have to do is you have to ask. And, it's all in the ask. You never know unless you ask. It's like in sales, they teach you that unless you ask for the sale, you're not going to get it. And so it's like closing the deal. So, I think you ask a series of questions along the way that ultimately lead the seller to the answer that you're trying to gain, which is, hey, would you participate in a creative financing deal? Would you participate in the sale of this property? And there is a series of questions. One of the things I give away is my scripts, the scripts that we use when we are talking to sellers about what questions to ask. But it's not just about the questions we ask. It's more about what do we do with the answer? Because when we have the answer, how do we be creative? This is a process that if you're a creative person and you can think outside the box, this process will benefit you. What's your goal for 2026? What do you want to accomplish this year? How was 2025 for you? Did you evaluate where you were at, where you ended the year? How about next year? What do you want to do? Do you want to do more? Do you want to do the same? If you're not in the place today that you wanted to be today at the end of the year, are you going to change that? Or are you going to be in this same place in a year from now? So questions that you need to ask yourself, sometimes people accuse me of asking way too many questions, but that's how you get answers, right? The better questions you ask, the deeper questions you ask. The signals that the seller gives you really come down to this. They come down to the fact that the seller doesn't want to own real estate anymore. He's what we call a don't wanter, somebody who just wants to get rid of a piece of real estate. I'll give you an example. Several years ago, we had a seller who owned a 400-unit apartment complex, 450 units. And the seller had just refinanced the property and he pulled $2 million in cash-free money out of the property. So when you refinance, you pull capital out of the property, you take that money cash or tax-free. And so the seller pulled $2 million out. But in instituting the new loan, he had a prepayment penalty, which means that if he sold the property right now, it cost him about $350,000 to sell that. Well, he didn't want to give up that money. So this seller, after refinancing the property, found out that his father had gotten sick with cancer, had stage 4 cancer, and all of a sudden became a don't wanter. Said, I don't want any responsibilities. I'm going to spend time with my dad. And I just want to get this real estate off my plate. So we were able to go in, structure an acquisition where we took over control of the property for very little money down. When you're talking about buying a $15-16 million asset at the time, traditionally you would have had to put down $3 or $4 million. Well, we didn't have to put anywhere near that down. And the seller gave up control. We took over control, ran that property, and it cash flowed a couple $100,000 a year. So I tell you this story because there's opportunity out there in no matter what you do. If you're just starting out and you're doing single family, that's a great place to start. If you have some experience under your belt and you want to do more multifamily, this is a great tool to have in your toolbox. Um, here's a great question. How do you raise capital from investors without sounding desperate or salesy? I love that because, this is what I do. I've raised millions of dollars over the years to buy and acquire real estate. And, I've come to the belief that I'm not asking the seller for money. I'm not borrowing money from the seller. But what we're doing is we're giving that person a opportunity to invest in their future, to create cash flow for themselves, as well as long-term wealth and generational wealth at that. Plus, take advantage of the tax benefits that come along with that. If I'm raising capital from investors, it's because we're going to take an asset, or we've put an asset under contract and we're going to close it now. So I think that it's all in your approach. And, I was in my mastermind last night and we got talking about mindset. And what was really interesting is that this whole game is a mindset game. And it's what we believe. It's the story that we tell ourselves. And if you're telling yourself a story that, hey, you're borrowing money, or why would a seller want to do this, then of course you're going to be in that situation. But if you're telling yourself that you're doing the seller a favor and you're building a story in your mind that you're helping that seller's financial future, or that investor's financial future, either case, right? The seller from the property you're buying or the investor that's investing in that property, then you start to recreate this story for yourself. It's a belief in yourself, and you have to believe in yourself in order to be successful at this. Let's see. Another question that we had was, when does seller financing make more sense than syndicating a deal? Well, honestly, I think that's a great question. I think seller financing always makes sense. It makes sense for the seller. It makes sense for the buyer. It makes sense for the seller because the seller can make more money doing a seller finance deal. The seller can get a better return on the money that they leave in the deal, or how you structure that deal. The seller can still participate in some of the tax benefits. If you do traditional financing, that seller has nothing left. Why not give the seller the opportunity to hold on to a piece of real estate and continue to make money? And I think it all depends on one of the questions that you ask that seller is, what are you going to do with your money when you close this deal? And by having a creative foundation and a creative structure to talk about what the seller's needs or desires are during that time, it helps you structure a deal. And one thing I would say is, these creative ideas and structures come over time. They come from you doing multiple deals. I've done multiple deals over the years. I've had multiple conversations with sellers. We're in conversations with sellers today about creative financing. If you're somebody who says, boy, how do you get all this? I'm going to cover a lot of this in the 6-week master program. That I'm going to also hold you accountable, give you activities and homework that you're going to go out and do work throughout the week. But you know what? If we find a deal, I'm going to help you structure it. I'm going to help you talk to the seller. I'm going to help you be creative with that seller. And I'm going to help you get that deal closed and acquired for yourself so that you take control. One thing about real estate is that it's not necessarily about ownership, but it's more about control, and it's in the terms. One question I get a lot is, how do you negotiate price with the seller? One thing I always say is, when I'm trying to do a creative structure, I'm not necessarily interested in price. I'm even willing to pay more for the property than the property's worth if the terms are right. Right? It's all in the terms and the structure of those terms, and how is the flow of money going to go? And that's all done creatively. And these are the things you start to learn by being in this process. Let's see, what's the best way to approach an owner who rejects creative terms on the first call? Well, if a seller rejects and they're not open-minded, I want to try and dig in and find out why they're not open-minded. So one of the questions I'll go back and ask is, hey, do you understand the benefits? I really want to know. A lot of times the seller just goes, no, 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 but maybe they really don't understand the benefits for them, because in creating deal structures that are creative financing, the benefits for the seller and the buyer are huge. So there's a number of reasons why sellers would want to participate in creative financing. And once you help educate them and let them know what those opportunities are, that they make more money, that they can get an interest payment, that they can get a monthly payment and have cash flow, that they can continue to build some wealth, some long-term wealth, that they get some tax benefits. I bought a deal one time from a seller who was like, no, I don't want to do creative financing. Well, this particular seller got transferred to Vietnam, and they needed to be out of their house. We had their house market. We were to sell the home, and it wasn't selling. And a lot of it was price, right? So homes don't sell because they're overpriced. It is the simple law or math about that. And so we approached the seller and said, look, we'll give you full price for the house, but we don't want to give you that money for 5 years. Now, knowing in 5 years from now, the house is going to go up in value, there's going to be more equity, but we knew how we could create about $300 a month in positive cash flow along the way. And the seller got some great payments on the property with a little bit better interest rate than what they would have been getting if they just took their money and put it in the bank. So, it's how we think about it, how we structure it. And, don't be afraid of thinking through ways that this could work. And I love this question. So I'm going to land the plane today with this question. How do you avoid overpaying when you use creative financing? I don't think you can overpay. Because if you get good terms, and part of terms is the length of time before you have to go get a mortgage or take the seller out of that deal. Maybe you can negotiate 20, 30, 40 years out. And, obviously we know that real estate goes up in value, especially over the long term. And the seller, even if you paid full price today for a property, but weren't going to take the seller out for 10 years. I mean, I own a property right now that the seller has $1 million second mortgage on the property with no interest and no payments for 10 years. But in 10 years, he knows he's going to get his $1 million. Why did he do that? Well, he did it because he knew if he didn't, he was going to lose that $1 million in a foreclosure. So, it's how we structure it. And then I'll leave you with this. Where do we find these best deals? There's multiple sources, multiple websites, multiple sources. There's sellers that are trying to sell their home by owner, those for sale by owners. There's expired listings. These are two of the biggest places. There's websites out there like Crexy and LoopNet that you can go search deals and get directly in touch with the seller. So, if you're somebody who's looking for opportunity, looking for creativity, looking for deal structure and processes, reach out to me. Let's talk about where you're at, what you're trying to accomplish, and how I might be able to be of help to you and give you some guidance. But thanks for being here this morning. I appreciate it. I appreciate the energy from buying real estate. I love the real estate business. I've been in the real estate business over 3 decades. Boy, that's a long time. But I've done everything from sales to creative financing to investments to syndications. I bought real estate with little and no money down. And my first experience in that was, a 4-unit apartment house that I bought with $1,000 out of my pocket. So, what are you going to do in 2026? What are you going to add to your toolbox? How are you going to grow? So if you have questions, if you are looking for some direction, for some guidance, throw them in the chat, DM me, let me know. We'll get your questions answered on next week's show. If you've joined any of the past events that I've had this year, welcome. Thank you. Continue to follow us. We're continuing to bring great information, but a big shout out to you for that also. Hope that the knowledge that we've shared through podcasts and through events this year has been helpful for you. As we start to get to the end of the year here, and starting to look forward into the new year, let me help you jumpstart it. So we're here every Wednesday. If I can help, I certainly will. Stay alert. Another masterclass drops soon. Remember the 6-week program coming up in January. Seats disappear fast for these things. So the next one, we're going to go even deeper into creative financing, scripts, dialogue, structure, terms, and how to price things in markets, and really want to look at markets and which markets make sense. And we're going to talk about some more wealth strategies, how to help you play bigger than ever in 2026. So keep your eyes open. The next session may be the one that moves you or changes your year to come. See you again soon next week, and keep stacking those doors up. We'll look forward to seeing you soon, everyone.